Absolute wealth. Real investors, real results.
Hubert Sanders here. Let's take a look at Apple. Apple broke the 400 area, and now that opens up the floodgates for much lower price. So where's the next place that Apple's going to slow down to? So I've got some lines on the chart, and I want to show you how I found them. So first what we're going to do is we're going to back up, and we're going to go look at a weekly chart on Apple. And you can zoom back here, and this is kind of where I'm getting these support and resistance numbers from. So if you look on the chart right now, you should see some squiggly lines that I'm going to start drawing. So when it broke 419, this little area right here, that was its support area. And I'll zoom in here so we can see that in just a second. And now what we're going to do is, since we've broken 419, the next area that it should slow down to, or next target for a short, would be $358. As you can just look back here in time, and you can see, there's a little bit of support here that's held several times. If that breaks, 358, and if it breaks, then the next stair step is going to be down here. That's going to be 315, and if that breaks, you're not going to slow down until you get to 266. Now, I am not saying that Apple is going to drop like a stone and go straight to 266 in a week's time. It's going to take substantially more time than that. But as you can see here on the daily chart of Apple, it has broken 419. So now what you do is you just start stair-stepping down with your targets on Apple. Since you've broke the 419, your next target would be 358. Now, what do you do if you're not short Apple? How do you get in the thing? Well, you could short new lows, but that's a little dangerous because you're making new lows, and Apple's beta and its average true range is a little thick. Like today, it was down $11, right? So wait for a pullback of some kind. And a strategy that works pretty good is a halfway back or an ambush trade. And how you do it is it's pretty straightforward. It's not hard. All you're going to do is grab a Fibonacci line and either draw from the beginning of the selling to the end of the selling, and that would give you a 50% retracement around 405. Now, that's still a little tough to get sometimes. So what you may want to do is just go half the range of a sell-off day. And in other words, you had the range from this high to that low. You would look to be short around $397 the next time Apple bounces up. Now, as it goes lower for you, if you have another bar that develops like that, then what you would do is you would then lower your Fibonacci onto that one and look for a 50% retracement. All right. Now, you figure out what the average true range is, and then you could use a multiple of an average true range as your stop, and your target would still be 358. Good luck. Hope it helps, and I'll see you on the next video.